All right, all right, all right. I want to basically welcome everybody to this session. We'll get the recording started. And this is a filler. This is a filler webinar that I was out of the office last Friday because of a conference at my church. This is Dennis Wilborn with the Active Trend Traders, and I want to welcome you to today's session. Hey, it's going to be quick, sweet, and to the point. So let's rock and roll. Welcome to How to Make Money Trading Stocks. This is the weekly live stream. I'm streaming it live on YouTube because we had some connection issues last week with our session. And so basically, I want to make sure that everything's working properly as we move forward. And I'm going to basically, so this is me. Hey, how you doing? Congratulations to Boise State and condolences to our Hawaii team last night. And also condolences to my Texas Longhorns. Played a good game against Oklahoma, but lost by 1 touchdown. Anyway, you guys, if you know me, you know I'm a big college football fan, and I love college football time. I also love college football time because it's the season, basically the season. Oftentimes the stock market will go on to a nice little run, and we'll see if that in fact happens as we move forward. We have been waiting for this crazy market to do something. So the big question I come into starting on the weekend is it doing something, or is it just still reacting to all the noise that's going on out there with regarding the China trade talk, the talk of the trying to basically impeach President Trump for whatever reason they can find, which totally makes no sense whatsoever, but we're not going to go there. So let's get into the market because that's what we are here to do. Want to remind you, we are here basically learn to focus on the process, profits will follow. Disclaimer remains the same. Remember that all we do is for trading purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of future performance. My objective of this real quick 15 or 20 minute video is to timely actionable intel, review at the end of each week, seeking to clarify, simplify market decisions so wealth can be multiplied. We look at it as we are on a mission to help our members and also ourselves multiply wealth, and that way, not so that we can hoard it for ourselves, but so we can help a lot of other people out there. My review of the market, I'm not buying this market yet. When we look at the charts of the S&P, the NASDAQ, and the IWM or the Russell, you'll see why. We still have yet to really define a real trend. We are bouncing in a range, and it's a broad range, and so there is money to be made. So make any long position you're looking at, make it prove itself. In other words, define your action zones on where you want to get into it. Plan those action zones where they are close to where you basically have a really well-defined risk, and your action zones are close to where that risk would be realized. In other words, we want to make sure that we are not getting chewed up in the meat grinder that oftentimes can take place with a sideways or a range-bound market. So we'll take a look at some stocks, ETFs, performance bonus setups, if there are any. And then you have been given the keys. Now learn how to open the door. This is the first time you've been at one of our sessions. We want to say thanks a lot. Thanks for being here. I'm looking at seasonality on the NASDAQ. Seasonality basically tends to be in place on almost every entity that is out there. One, we are in the October, November, December timeframe. What does the seasonality tend to look like during this time frame? Well, it tends to look like basically a rally into the end of the year. Now, last year, the seasonality did not look like this. Remember, last year we had a sell-off into almost to the midsection of December, and then a nice little bit of a rally that led to the rally going into the to 2019. So again, as we look to seasonality says, hey, we should bounce. And but just remember, it's just like probabilities. If we have a 70% chance we're going to bounce, there's also a 30% chance we're not going to bounce. But this tends to be the tendency. This is over a 15-year period, or 20-year period, excuse me, and it remains the same. I'll update this chart at the end of the year. Same thing for the Russell. Russell tends to roll into the end of the year with a nice rally mode. Here's where our performance sits as of the end of trading on Friday. We're up 29, a little over 29%, and this is the net. This is not the gross. Our gross is actually up about 34, 35%. And as you can see, we have caught up and surpassed the indexes, and we'll continue to, plod along, moving forward. So with that, I want to take a look at a couple of different areas. One also is, we're going to go to the charts. But remember, if you are not at least a free active trend trader members, you do not have access to our customized watch list. One of the major ones we have is this one's our power ranking watch list, where basically I do a review every weekend of every stock on the IBD watch list. Now I'm talking about not just the IBD 50, not just the big cap 20. I'm talking about all 13 of the IBD watch list. I roll them together. I analyze them basically, and I generate a new power ranking list every week. What this tells you is these are the stocks that floated to the surface after taking a look throughout the all the other list. What does this do for you as a potential investor? Or it gives you a place to focus that's concentrated. Oftentimes, investors and traders, they'll look at a list and they'll have like 100 stocks or 50 stocks or 75 stocks or 20 stocks. And they go, well, where do I search? And the thing about it is this hones it down to a more manageable amount. As you can see by many of these tickers here, they are the stocks that tend to move. Lulu, now CPRT, and RH, all getting ready for earnings coming up. And so it's a good deal. So let's take a real quick look at the indexes and see what they're trying to tell us. So I've got a weekly chart over here on the left. I've got a daily chart here on the right. We are still working within the larger megaphone top. We are also working, and one thing to be aware of is oftentimes stocks and indexes, they demonstrate patterns within patterns. So in the larger scheme of things, like in a weekly chart, monthly chart, the pattern that's being seen is the megaphone top. Now that typically resolves with a downside flush. It's what happened last year. Around the October time, we had a big flush down to the bottom of the megaphone. Are we going to get the same thing here? Because within this pattern, what we're seeing right now is we're seeing basically a trend line that goes across here, a little bit of a upward slanting triangle, which oftentimes is also an indication of resolving down to the downside. Right now, we're in the middle of it, and that's the meat grinder I've been talking about. So Friday, what do we get Friday? And just look at the most recent action here. Let's blow this up a little bit. What do we see is the question was last weekend was, are we going to pull back up into the moving average, go into a similar pattern that we see right here earlier in the year, in the August through the first part of September timeframe? But are we just going to go back into a horizontal range bound pattern? We get a big breakout on Friday, primarily news driven. what is very, very interesting is if you will, pay attention to this, is somebody was buying here, somebody was buying there, somebody was buying all the way over here at the top. And so what we see in Friday's candlestick is a candlestick that gapped open. It opened where it closed, okay? So that is a doji. This happens to be a shooting star doji, because we've got a nice little uptrend, which is a bearish reversal signal. Now, why did this happen? Well, one of the reasons is in this area where it ran up to on Friday, there sits a whole bunch of people who bought on the way down. And they're the ones that are sitting there going, dear Lord, if you'll just let me get back to break even, I will get out of this trade and exit. And so as you can see very clearly, sellers came in. So the people who were buyers in this little zone up here came in and say, okay, I'm selling, I'm out of here. I got back a little bit of my money. I'm done. The good thing, the good thing about that is the more of these, people who bought at the wrong time, the more of those who get flushed out. In other words, they are removed from the equation. It prepares us for in the future, a strong move to the upside. So just remember that. When is that going to happen? I don't know exactly. I mean, price action just may come right back down here to the moving averages, or to this trend line that we busted out of. That would be a great place somewhere between, I'll give you a number, 294.50 all the way down to, I would say, about 293.25. That would be a good area to be looking for a potential long side trade on the S&P or the spiders. The index that I really prefer trading is the Qs and the Russell. Why is that? Well, one thing, the Qs, or the NASDAQ and the S&P, tend to run on the same track a little bit. And so if you trade, if you're trading, there's no need, you're not really benefiting by trading both of them at the same time. The NASDAQ has been stronger for this year. And so NASDAQ, and then the Russell tends to run on its own path. As we've seen with the Russell this year, it has not been as strong as the other indexes. So what do we have going on with the NASDAQ, as represented by the Qs? Similar type thing. Price action got all the way up into this area. What happened? The people who bought over here said, okay, that's close enough. We're selling it out. And they did. They flushed it down to the downside. So as you see, we had a high volume day, but a lot of it was actually price action to the downside. So that's a great way to look at those candlesticks. So again, I'm looking for, if this high is a good one, in other words, if it is a level of potential strong resistance, then look for a pullback, about a half back. And those moving averages, the 8 and 20-day moving average, look very, very tempting for a potential, location to bounce. IWM. Okay, IWM. It continues to struggle a little bit. Look how wide the day on IWM is. It bounced up, hit the 200-day moving average, and retreated back down to the 20-day moving average. We do have a nice breakup to the upside on TSI. We had a higher positive divergence on TSI. And so if we can get price action to move back above the 200-day moving average, and we should be in tune for a move back up to about, somewhere between 158 and 159. And that action there, and I'll just grab a hold of this, and that would be about a 4% move on the IWM. Translate that over to trading T and A in that move, so that would be 4 times 3, about a 12% move that could happen. I am not interested in buying IWM or its leveraged ETFs where it's at. I would want to see it retesting back down here around the 8-day moving average, or we get a breakout, then a pull back into the moving average, and that would look something like this. We could actually get a breakout above the 200, a pull back into the 200 for a rebound from there. And so the key words here is to be patient. We will get a setup on IWM and the NASDAQ in the very near future. So one of the things I want to bring to your, so that's what I've got going on the indexes. As again, I am, look over here to the weekly chart here on the Russell or the IWM. It's got a really well-defined level of support at the 145.32 level. It's got a very well-defined level of resistance up here at the 158. If we break through out of this box, where are we likely to go? Well, you can just throw on a line right up there, up to there. There we go. So, and then just elevate that, move that on up to, let's activate it. And so if we get a breakout, and I'll just lay that in there, that would be approximately the area where we would get the breakout. So look where it takes us. It takes you right back into the past highs, But from a technical standpoint, that would be your technical target going forward. And so that would really, and that would be a good move, because that would give you a move of about 8%. So multiply that times 3 for the leverage ETFs. So I want to call to your attention, one of the things I've been looking at, if you're ever looking for something to trade, if you basically invest in Leaderboard, you can come here to Leaderboard and check out the leaders that are near a buy point, and they will pop in down here. I basically like to take a look at that leaders toward near a buy point, and you can spit it out as a just export it as an Excel spreadsheet, and it just shows you several stocks that are close to IBD buy points. Now, I don't utilize the IBD buy points, but oftentimes these stocks that are identified here are also stronger stocks. And so then it's just being patient and waiting for another setup to happen. But they are identifying really strong growth stocks that are close to a setup. In our, let me show you what we came up with last week. If I can find them. Yeah, we did a, and it looks like this. You get a whole list of stocks off the watch list. And here's the one. We had ASML, Burlington Stores, Costco, Copart, EW, Lulu, MasterCard, Microsoft, RH, and TDG, and TPX. All of them indicated. So that's 1, 2, 3, 4, let's say about 10 stocks. Really quick to go through those and review those. But again, it's all about clarifying, simplifying what you're doing so you can basically multiply your account. So let's see. So again, if you do not want to be, basically taking like the that IBD customized or premium account, you're going to get a good list of stocks with active trend trading. So I need a speaker for your group. I can customize my meetings and do one in person and or by webinar. Our next Bay Area Moneymaker webinar will be on November 2nd. We're going to be talking about profitable income trade strategies. Got a lot of friends who are looking for ways they can trade some income. It's trade for income, and that's what I'm going to be highlighting. And then premium members, of course, we have more live trade updates. We're doing 2 live trade sessions per week, one on Monday, one on Friday, to basically start the week and close the week. We want to be plugged in at towards the close of the market on each of those days. And then I do have a free webinar that's coming up. It's in the planning. We're working on it. So let me help you find the top 2% of great stocks every week. This is, again, the weekly elite watch list that I put out at Active Trend Trading. I offer it to all members, free, the ones that are premium members, free members, that you can just go here to make sure you are signed up for that. If you are a premium member, you're already signed up for it, or if you're already a free member, but you can go there. And how can I say, let me help you find the top 2% of great stocks is, well, basically in a book that we were highlighted in by Amy Smith, Bill O'Neill said, the guys in this book can show you how to find the best 2% stocks. So I believe what Mr. O'Neill says. So, hey, thanks for joining us today. It's good to see that we're back operational on YouTube. We're looking forward to a real strong rest of the 2019. I have upped my personal profit objective up to 50% for the active trend trading system going into the end of the year. You're going to want to stay tuned. We got some really cool enhancements to active trend trading going into the end of the year. So be paying attention. More to come towards the first part of December. So with that, I'll say aloha. And if it were a Friday, I would be saying we'll see you in the next hour for the final hour. But until this coming Friday, God bless, aloha, trade well, prosper, have a great rest of your weekend. Aloha, everybody.